Uber is a really exciting company. They've been growing their revenues, they've been growing the number of platform users. Overall, they are just a huge success story, and they are beginning to really generate free cash flow, which is exciting. They've spent over a decade building their company, establishing their platform, and now profitability and free cash flow is something that is a common theme with this high growth company. Uber announced their earnings this week, and I have a fresh set of financial statements to take a look at and value the company based on the new information that I have in hand. I'll be going through that evaluation and establishing what I think the value of Uber is and comparing it to current stock prices. I'm a current Uber stock holder, and at the end of this video, I'll make a decision whether I'm going to buy more shares, hold my shares, or sell my shares in Uber. Do me a favor and like my video and subscribe to my channel. And please give me a comment on Uber. Let me know what you think of the company. Now let's get into my process. I follow the same process as I invest in companies, and I want to look at 4 key questions. And based on the answers to those questions, I buy, hold, or sell. The first question is, do I want to be part owner in this business, and do I like the industry? Second, do I think the management team's doing a good job operating the company? Third, is the balance sheet in good shape, which means that debt is less than 3 times EBITDA? And am I getting a discount on the stock? I want my investment to go up in value. Therefore, I want a discount when I buy shares. And based on the answers to those questions, I will buy, hold, or sell. On November 7th, Uber announced their earnings, and it was a very good earnings report. The monthly active platform customers for the company grew 15%, which is great. That means more people have the app and are using Uber. So good to see that growth. It's been nice, consistent growth over the last 5 quarters. The other thing that's gone up is the number of trips. It's gone up 25%. So just really good metrics from Uber with regards to volumes and the number of platform customers. Gross bookings over the last 5 quarters has been going up. And when you compare year over year growth, it went up 20%, which is very good. Looking at their income statement, it's good to see that for the quarter, the revenue was flat, but year to date, you see a growth in revenue, which is really good. What's more important is that they have a profit in the year to date as well as in the quarter. Uber really focused on becoming a profitable company. For a long time, they were a high growth company, but this is where you really see great value being developed and generated by Uber. If they can keep growing at a very, very good rate, if they're profitable and generate free cash, they become a really valuable company like others like Google, Alphabet, Meta, Microsoft. Those companies are growing and they generate great free cash and are profitable. Uber's balance sheet got better. The amount of cash and short-term investments went up if you compare the current balance at the end of the third quarter compared to, I guess, the beginning of 2023. More importantly, their ratio was close to 4 when you compare net debt to EBITDA, but it's improved and is below that 3 that I'm looking for. So really good improvement on the balance sheet from Uber. The amount of free cash that Uber is producing has really gone up. It more than doubled if you compare just Q3. They generated almost $1 billion, where a year prior they generated $432 million in that quarter. Year to date, they're at $2.7 billion of cash from operations. That's in line with what I expected. And they don't need to put a lot of capital into the business. This is a technology company, so they're not like building factories or having to open up retail stores. And that's just a great sign that they have well over $2.6 billion of free cash for the first 9 months of the year. They're on a great rate for the full year of 2023. I'll be using those numbers as I value Uber. Based on my analysis, I believe Uber stock is being sold at a premium of 13%. And what that means is that I think each share is worth about $45, but the market will sell you shares at $51.45. So people really like Uber stock. Good reason for it. They're growing, profitable, they're generating free cash. Now, how did I get to these particular valuations? Well, I look at free cash flow and I also look at earnings per share. Let's take a look at free cash flow first. So they're doing great with regard to free cash flow. And this is what I estimate they're going to do in 2023. And I'm going to grow those free cash flows at a pretty good rate of 25% in years 2, 3, and 4. I mean, Q3 of 22 versus Q3 of 23, they more than doubled their free cash flow. So growing at that rate's very reasonable, might even be a little conservative, but I think that that's how they're going to grow. The terminal value is going to grow by 4%. So I think all free cash flows in the future will amount to $140 billion. I'm going to discount all these cash flows I expect in the future by 9% as a discount rate. I get to an intrinsic value of all those free cash flows of $107 billion. I'll add the cash on the balance sheet, but I'll take away the debt, getting to an equity value of $103 billion for Uber. The market cap on the company is 105.8 billion. So they actually are being sold at a premium of 3% if you look at the company valued by free cash flows. Earnings per share, they just began to become profitable less than a year ago. So they're just beginning to really establish their earnings per share. But the next 4 quarters, I estimate they're going to generate about 97 cents per share. And I'm going to take that against a very high PE of 48, which is reasonable. It's a high growth company. It's early in the earnings per share generation for the company. So 48 is reasonable to me. I'm going to grow those earnings by 5%. And based on that factor and discounting all the earnings per share in the future, I get to a value based on earnings per share of $34.81. But the stock's being sold at $51.45. So based on earnings per share, Uber is actually being sold at a 32% premium. I look at free cash flow, the valuation I did based on free cash flow as having greater weight. It's actually 2/3 this value and 1/3 this value to get to that blended 13% premium on Uber stock. Again, their balance sheet's really improved. The last time I did an analysis on Uber, this was close to 4. But what they did is they improved their EBITDA and they improved their net debt. So it brought them below that 3% metric, or excuse me, that 3 metric of net to EBITDA that I want to see. Looking at where the stock is traded over the last 3 to 4 years, they've only been public for about 3.5 years. The stock's really had a journey. They IPO'd and then the stock really went down. It really rose around early 2021, and then it really went down in 2022, along with a lot of stocks. And ever since then, they've just been on a tear. They're actually up 78% in 1 year. So it's just been a really good winner. And really buying Uber in this range is just a winning recipe. They were already generating free cash and showing profitability. So I was a big buyer of Uber in this range, and I'm really glad I did so. I think their value is $44.94. They're currently being sold at $51. So should I invest more of my hard-earned money in Uber? Well, let's answer those 4 questions that lead me to that decision. I think the company is great. Glad to be a part owner in the business. Really like the industry. The management team's doing a great job. They moved their debt to less than 3 times EBITDA. Great job there. There's no discount. So that's kind of a showstopper. I'm just going to hold my shares. If the stock rallies further, which is possible, maybe 10, 20%, I'm probably going to sell half the number of my shares just so I can take that gain. I like to run my portfolio. When I see that a stock is being sold at a pretty good premium, I like to lighten that position, if not sell the whole position. I could always buy Uber when I believe it's at a better buy with a better discount. And if the price were to go down, I'll be monitoring that. And I might buy Uber shares if the price goes down. We'll see. But at this point, I'm just going to hold my shares in Uber. So that's my video on Uber and my analysis. I hope you found it interesting. Do me a big favor and like my video, subscribe to my channel, and please leave me a comment. I'd love to hear what you think about Uber. With that, let me wish you the best of luck in your investments for the remainder of 2023.